Hello everyone, welcome to my YouTube channel. Dave Ganderos here. As you can see here, this is my channel. If you're just finding my channel for the first time, please consider subscribing and clicking the little bell so you can get alerted to new videos that I put out. If you're looking at the video like this, please consider looking at the show more. There's additional information here. There's topics that I'll talk about. Some of the actions you could take depending on what the video is about. Some of my other opportunities, ways to contact me, just a general risk disclaimer regarding the fact that I'm not a financial advisor. These videos are considered educational and should be used to teach you how to do technical analysis, and then you should do your own technical analysis and decide if trading or the trades that I'm showing here, possible trades, are good for you, but you have to make that decision for yourself. Please do not take anything I share here as financial advice. I am not a accredited financial advisor, so please seek out the proper person with the proper credentials if you're looking for a financial advisor. But I hope you learned something from these videos. Today I'm going to be showing some additional information and technical analysis on some cryptos. Now, what I want to do first is I want to respond to one of the comments I had here. So this guy's looking to get some more information about Cardano, VeChain, Chainlink, Voyager, Aave, and Graph. So I'm going to go over the coins I already have on my trading view currently. And I'm going to talk about Chainlink a little bit, and then I will set up another trading view screen with these additional ones, and I'll go over those as well. And again, it's not financial advice, but based on my technical analysis, I'll kind of show you where the prices can go. Now, unfortunately, it's very hard to say when that's going to happen. There are tools that you can use to kind of estimate, like based on the previous actions, assuming the same actions will happen again. You can kind of see where things can go, but there is no guarantee on time frame. So price targets are price targets. Price targets are based on previous price action. So targets are pretty easy to kind of come up with. Will they get there in a day? Will they get there in a year? That's unknown, but at least you'll see where it can go, and just realize it's not going to be a straight line to that number. There's going to be ups, there's going to be downs, and those kind of things. So I'm going to chip away at answering this one of my subscribers' comments. Please, if you have some that you want me to look at, again, I am not, some perfect technical analysis person. I'm just going to share with you my thoughts and how I would look at the charts, and then you guys got to decide for yourself if the charting that I did matches what you're doing. And then also, I strongly advise you to follow some other people that do technical analysis. So between a couple people on YouTube, you can kind of start seeing how technical analysis is done, and you can start learning for yourself. Again, there's a lot of free resources on the internet. One of the important things you should look at is chart patterns. You should get used to the triangle, support and resistance, and Fibonacci. If I were to do anything, and those are the ones I would focus on initially. Then you can get involved with RSI and divergence and all those other things that I'll talk about at some point. But I want to keep it simple for the new person, for the newbie, and just kind of get your feet wet on what technical analysis is and how it can be used to do higher probability trades and set traps for price action, and you wait for the price action to fall into your trap rather than chasing blindly by just buying. Now, if you're in a long-term vision where you just want to own a coin and you want to hold it for a couple of years, then I just strongly advise you just to figure out a dollar cost averaging structure for yourself. Maybe you buy it once a week, once every 2 weeks, once a month, and you just continuously purchase that coin consistently for the same amount of money over time. Now, if you have extra money on the side and there's a big dip or something, you can throw that at that coin when those events occur. But on average, you shouldn't really be worried. If you're going to buy it every Friday, and just think about a year, 2 years out, or whatever your time frame is, and don't worry about trading. So you should have a pot of coins and a pot of money that you're investing for a longer term, and then you can have a pot of money that you want to trade with, and you should have a little bit of both. Again, when I say you, I'm talking about myself. This is what I'm doing. And that might be good for you. That might not be good for you. You have to make that decision. But I'm kind of sharing my personal thoughts and my personal approach to cryptocurrencies. I have a bunch that I'm keeping longer term, and I have some that I'm getting in and out of to generate, more coins. So, for me personally, that's the way I'm doing it. All right. So anyway, let's get into the charts. Let's see how far I get. I'm going to kind of cut it off depending on time. I don't want to make this an hour video. So I'll do what I can in this video, and if it needs to be another video, I'll make a separate video. Let's start with Bitcoin. So, yesterday or the day before, I think it was yesterday around the same time, I made a video and I shared this wedge / triangle formation that was occurring on the 4-hour. The higher you go, the higher the probability for the patterns to play out. You can see here, this was a pattern I was following in the past. It broke out. It certainly hit the target. The target was basically the measurement of the base, from price action high to price, basically the pivot from A to B. And then you put that at the breakout point. And that's, a realistic target that you can make for your trade. So it met the trade. It actually did better. And now we're in the middle of another breakout. So let's go back down to the 4-hour, and you can see it's in here you don't want to trade. Basically, you're waiting for it to either go up or to go down, and then from there, you can have your sights set at various targets. The obvious one is you take the price from top to bottom, and then you put that at the breakout point. So with that, possible price target is pretty much 59, a little bit over the all-time high of 58. So that's one of your targets you could do, but other targets you could figure out. You could figure out, possible resistance and support lines that you're seeing on the chart. This seems to be one of interest. There's a wick here. It was resistance, and then there was some support, a lot of support. Came down, wicked up. Support again, and it broke through, came down, went up, support. So this seems to be an interesting level to consider. So you might want to consider, if you got into a trade down here, you might want to consider getting a partial profit as it approaches this level, because there's a chance it could turn. So, as price action is moving up, you want to, bring up your stop loss and guarantee yourself a break even at least. And then from there, you could decide what you want to do. Do you want to take 50% there? Do you want to take another 25% up here? Or maybe actually, before you go to the target of the pattern, the next possible realistic target that you should set is the all-time peak right here. When it hits this price, there's going to be some resistance. So maybe you get out 50% there, you get out 25%, and you leave the rest in case it breaks out and goes into price discovery. If you remember what I was saying earlier in my last video, you go to the daily chart, just on this one pivot, there's algorithms that are working to push this up to 65. Then you also got to realize, I didn't talk about this yesterday, but in addition to the algorithms trying to push it up, there's algorithms that are trying to push it down. So what you can kind of do is you can kind of do another Fibonacci from top to bottom, and you could kind of see that, this retracement, if it continues down, the 618 and the 65 is matching exactly where the algorithm targets that are trying to short. So price action could actually come down here. And if it comes down, then that the algorithms are pushing it down to their green target. And also once once they hit their target, a lot of times they switch directions, which it's falling exactly in this this window, right? You always got to have you always got to think about both sides. You can't just be blind to believe that it's only going to go one way. So in the case that price action changes direction and is going to push down, this is a range of interesting influence, but although it pushed off the 0.5 like we talked about, and it's pushing higher, so things are looking like we might be going higher instead of lower. But you got to put this out there. This is an interesting spot that if it comes down here, you might want to I would possibly think about getting into a long trade from here. Now, if it yeah, so that's all I really want to say. Over here, again, this is what I was saying. This is the extensions and the price targets from the Fibonacci right here. So this is the possible target in short term that if you're in a trade and it's going to continue and it breaks to new highs, this might be the next area of people selling, algorithm selling. People that are doing the same analysis I'm doing here sees that these are typical targets, so people might start selling up here. Now again, our target for the pattern is here. Now as price action's happening over here, it could create either a larger target, a pattern, or this might have to be changed to fit whatever's happening now, or a new pattern might emerge. Just like there was a pattern here, now this is a new pattern. There could be another pattern, and this is considered a bullish scenario. When prices go up and come down and go up, this is typically a bullish sign. Retracements are part of the game, either in the upside or the downside. So if you could see right here between these two levels, they're going to define which way we're going to go. If it breaks through the 6.5 or in the 618 right here, then there's a higher probability that's going to keep going higher. This is where you might also see some selling. So, you could in fact decide to set a target to sell a little bit of your trade right here as well. So just like you got in possibly in multiple entries, you should consider getting out. That's just smart money. Sell some here and sell some at the peak, and certainly sell some when it comes up here, and then maybe leave a whatever portion for the long run if that's what you want to do, or just wait for wherever this goes, wait for the pullback again and get in again. If it comes up here, maybe there'll be another 50% retracement, from here to here. Maybe once it hits here, you get out up in here, and then you wait for it to come back down here. Let me get rid of some of these. Let me get rid of some of these so I could just kind of show you what. Okay. So just assuming that price action is going to come up in here, you could kind of see and kind of lay out a roadmap of where you think it might go. If price comes up to here, or maybe you split the difference and you put it in the middle, then there's a good chance if you got out up here that price action might come back down here again, and then at that point you can get in again. So you've gotten out here, you cashed out, and you have your USDT or whatever you're putting it in, or another stable coin, and then you're gonna wait for the retracement, and then you're gonna lock out your profits here, and then you're gonna be able to buy even more because you got out at a higher price, and now you're buying in at a lower price. So that's how your compounding effect of your account's gonna happen. So I can't stress enough how important Fibonacci is. The fact that this video is already gone 15 minutes, I think I'm going to stop this video here, push it out so you guys can look at it, and then I'll make another video for the next coin. All right, so please like and share the video, subscribe to my YouTube channel, and I look forward to sharing my next video with you. Take care. Have a great day.